Have you ever hit buy right as the market spiked, only to watch it instantly reverse and wipe you out? Compare that to catching the absolute bottom of a pullback, where your trade shoots straight into profit. Financial markets operate exactly like physical auctions. Buyers are constantly hunting for a bargain, while sellers are demanding the highest price possible for their assets. To avoid buying when things are too expensive, we need a way to measure value. We're going to build a custom mathematical tool that perfectly splits price movements right down the middle, giving us a clear line between good entries and terrible ones. Understanding this 50% boundary is what separates traders who move alongside massive institutional money from those who get chewed up as retail liquidity. Step 1 is setting up our filter. Go to your charting software and select the standard Fibonacci Retracement tool. We are going to clear out almost all the default math. Look at this settings menu. Uncheck every single box except for the 0, the 0.5, and the 1. Next, add a subtle background color. This makes it instantly obvious whether current prices are sitting in the top half or the bottom half of our range. By stripping away the complex Fibonacci levels, we reduce the overwhelming market noise down to a single actionable boundary line. Now let's apply this to a chart. Find a clear upward leg of price movement. This will serve as our baseline when we are looking to place a buy order. Anchor your customized tool at the absolute bottom of this upward move and drag it all the way up to the exact top. This chart divides the upward move in half. The red section above the 50% line is the premium zone, which is too expensive. Buyers wait for the price to drop out of that red territory, crossing the midline. It illuminates green, entering the discount zone. This simple constraint, avoiding the top half, prevents you from entering a long position at the very point where the market is most likely to rebalance lower. We use the exact same logic in reverse when looking for selling opportunities. Find a clear downward leg of price movement on your chart. This time, anchor your tool at the absolute top of the downward push and drag it down to the extreme bottom. For a short seller, that bottom half is now the discount area. If you initiate a sell order while prices are this cheap, you leave yourself with terrible profit margins. Take a look at this downward trend mapped with our tool. The top half is highlighted in red, marking the premium zone. This is exactly where sellers secure the highest possible prices, maximizing their risk-to-reward ratio before the market continues dropping. Initiating a short sell below that 50% line puts you at a disadvantage. You are attempting to sell at a price the market has already signaled is a relative discount. One of the most common dilemmas you face on the charts is having multiple valid zones to choose from, leaving you to guess which one will actually hold. Look at this chart. We have a strong upward price trend, and it has created 3 distinct, structurally valid demand zones, one near the top, one in the middle, and one at the bottom. To decide, we apply our customized filter from bottom to top. The highest demand zone falls entirely within the premium half, invalidating it, so we cross it off. Meanwhile, the lowest demand zone rests cleanly in the discount half, marking our mathematically viable entry. Layering this 50% filter over your zones provides a mechanical rule for selection, allowing you to ignore noise and focus on areas with the highest probability of institutional interest. You've moved from guessing between multiple trade setups to relying on a strict logic-based execution filter. By entering in these zones, you are positioning yourself for better risk-to-reward ratios and avoiding entries that are prone to deeper pullbacks and higher drawdown. Now it's time for some homework. Open up your charts and map out this custom tool on 5 upward price moves and 5 downward price moves. You need to actively train your eyes to recognize this 50% threshold on the fly.